Mic check one, two. Mic check one, two. Noah here. We got another great episode of Noah Talks going on a Friday, the end of the week. Who's tired? We got work. We go to work every day. Oh my goodness. Something's got to change. Something's got to give. Because this shit is not sustainable. People working 8 hours a day. 1 hour to the office, 1 hour from the office. No. No. Yeah, they were talking back in the 60s that we were going to work 4 hours a day and things were going to get better. It's gone the other direction. People working 10, 12, 14 hours a day. Absolutely ridiculous. With the purchasing power of the dollar being destroyed basically in real time. You could literally watch a rolling calculation of the your I always like to say people look at a bank account balance and see $10. But the truth is, who cares about the number of dollars in a bank account? What we care about is the purchasing power of those dollars, which basically means that number is not a fixed number. That $10 isn't $10. That number is constantly changing. It's going up and down. I wish my damn bank account app didn't say dollars that I have. It says purchasing power that I have. That would be more meaningful. How much shit could I buy with the $10? I don't care that I have $10. My lord, Caterpie in the house. The check has been completed. We are ready to roll. What we see on the screen is the result. Oh no, that is content later to be shown. What we see is the result of yesterday's poll. I'm loving these polls because this is what people want to see. This is what people want to talk about. And that's what I want to talk about. Money printer go brrr. Obviously, more DeFi is what people want to talk about. A little bit of Ask Me Anything. And that's what the chat, the live chat is for. Throw your questions. I'm going to try and interweave it with the story that we're trying to tell. And today's story has to start with money printer go brrr. And $10, you're rich. I like it. I would love if, well, bear in mind if we had a ridiculously deflationary event. It's not going to happen. Anyway, we could dream. All right, so money printer go burr. Look at this chart. I love Sven. Sven is absolutely incredible. And what is this? This is a massive rising wedge. This is the state of the mega bull run that everyone is talking about with stocks going up and never coming down. A rising wedge is the one of the most ultimate bearish patterns. And guess what? Today it broke down. Um, the support broke. And this is just for the fundamental analysis that I would apply to the stock market is vaporware, a house of cards. And this is a perfect example of that kind of fundamental analysis coming to be the case. There is no logical reason for these stocks to be valued as such. It is pure speculation. And I talk about this in the crypto space, where stocks have to have a fundamental reason, a deflationary component, a recurring revenue stream to reasonably make sense for the valuation to be what it is. Now, there's no reason for the valuations of the stock market to be what it is. I won't be getting into the craziness of the virus, but I have no doubt. I think about that quite often, and I have my opinions. Rising wedge, this thing is non investable. I look at the stock market and there's absolutely no way. What are we at? 150 plus percent market cap to GDP? How much higher can it go? The risk versus reward is the worst ever. This stuff makes crypto look ridiculously stable, or at least more appetizing. This thing is just disturbing. My man asleep, loving the work. I love doing this. It's for you guys. I'm able to express ideas. You're able to think of ideas, ask questions, and we're all able to make better decisions. Check this shit out. Mortgage forbearance. Nobody's paying their bills. Nobody's paying their debt. No one's paying their rent. No one's paying their car loan. This is not sustainable. In fact, it's not just not sustainable. If you take the clock and roll it forward, this is disturbing. What does this mean? This means that when people buy debt, when the bank has debt, they sell it. Somebody is getting interest when you pay your debt, when you pay your mortgage. Someone is getting interest. With these deferments, these people aren't getting paid their interest, which means the system is halted, it's stalled, it's broken. There's a debt being accrued merely to pay the interest on the debt. And it's to the tune of countless billions of dollars. And it's scary. And this thing is a house of cards. It has the potential to implode, evaporate into nothingness because it is nothing. It's a big charade. Lewis hit the nail on the head. Last time we were back at 150% stock to GDP was 2000 pre-crash. This is exactly why Warren Buffett is not touching any of these stocks. These things are overpriced. The peonies are absolutely disgusting. There are no deals. This is an uninvestable market. Well, don't get me wrong. I threw in a put on Wells Fargo yesterday. Where is it? Where's the chart? This is the Wells Fargo chart. Meanwhile, we had the news about the stress test yesterday. And look at this. There's a fat double top. And the, the stress test says that the solvency event, people aren't paying their bills. These boys are going to lose billions of dollars because no one's paying their stuff. Throwing a nice put option for, what was it, July 10th. That was a quick 50% overnight. Not that I play that game. I don't trust the markets. It's way too volatile. Too much risk, not enough reward. But these, man, 50% overnight. I didn't put much in. It was a $300 gain, but ooh, it's nice to get a win every now and then. What else we got? Is this what I wanted to have? No, this is so not what I wanted to show. Let's see if we could find the content that I had on this page. Oh, this might be it. This might be it. Yes, check this out. So, what does this mean? The Treasury yield is the lowest since June 1st. Well, aside from the June 1st, the Treasury yield is basically ridiculous. The number is just going down and down. And why do Treasury yields go down? Treasury yields go down inverse to purchasing of Treasuries. People are throwing money into treasuries. As Raoul Pal likes to say with regard to bonds and treasuries, the yield is going to zero, maybe even negative. Particularly because at some point the solvency event is going to destroy all faith in the equities markets, and there's going to be a flood of money into these types of instruments. And that is real. And this is a great sign, as Raoul says. Look to the bond market for the source of truth. If the bond yields start going to zero, that means it's a rush because they're basically 0% yield. There's absolutely no reason to put money value into bonds and treasuries. It's not being put in for the yield, it's being put in because everything else is disturbing. Here's an interesting thought that you should realize. As the stock market goes up, let's say it takes $10 to buy a stock, then $12 to buy a stock, then $15, then $20 to buy a stock. That is equivalent to purchasing power of the dollar destruction. It requires now more dollars to buy the same quantity of stock. That is an inflation. And that is exactly what we've been seeing with this run up. Absolutely real and absolutely disturbing. And we got a fat 500 plus point drop today. Let's see if we refresh this page and see the changes. What do we got? What do we got? Ooh, ooh, ooh. With the browser lag, 581 points, 2.26%. On the Dow Jones, 170 points, 1.7% on the NASDAQ. I wouldn't touch this garbage with a 10-foot pole. This is pure speculation, and I am not a trader. If you do not have years of technical analysis experience, do not touch this. There is too much risk, not enough reward. You cannot apply fundamental analysis to these markets. Bear in mind, the fundamental analysis says this thing is going to fall through the floor. This thing is a house of cards. There is no support. There are no sound fundamentals for the equities markets. It's the God's honest truth. But there sure as hell is some crazy stuff going on in the DeFi land. I think this particular page is a little bit uh, not placed well in the story that I'm trying to tell. But what the hell? So yield farming is a meme. It's a meme. It's nothing more than a meme, and this contributes to the complexity of adoption and understanding of the space that's being created. It's about yield. Yield farming is applying maybe a cartoon type impression to the process, but this is the search for yield. And as I've said, the search for yield is alive and well in the DeFi space. The search for yield is completely dead in the legacy space. Bond yields are zero. Treasury yields are zero. If corporate debt, sure, is going through the roof because it's garbage. And look at the revenue for these corporations. For to understand this, you really have to look at the virus numbers and not apply a political perspective to it. You have to apply a mathematical perspective to it. If you have X amount of infections today and it's an exponential growth rate, you're going to have X amount of infections in 2 weeks, in a month, in 2 months, in 3 months, and you know what the heck that's going to do to the economy. A logical, non political analysis. Wells Fargo, as I said, double top, stress test, banks are in trouble. Be diversified. You need cash because it is liquidity. It is widely accepted. Everyone takes cash. So you need it to pay bills, but it is not a store of value. I do not trust. No one should be saving cash. No one should be accumulating cash. It's too risky. What if it inflates? Then you lose your purchasing power. I mean, clearly you're losing your purchasing power with regard to equities. And now, if equity is up 100%, you have to pay twice as much for the equity. You've lost all purchasing power in the dollar. What does that mean? It means cash isn't what to save, but you need cash. So this goes into the portfolio balance conversation that we've had many a times. Always remember that. Be diversified, never go all in, but never spread too thin. That's the rules of the road. Oh my goodness. All right, let's get into a little bit of crypto. SNX, synthetics. This thing is through the roof. I mean, look at this thing. What was it, May 2019? It was below 2,000 sats, and now we're up at 20,000. This thing's up thousands of percent in the course of a year. It is. I look at the weekly time frames, obviously. As I've said, there's meaning to look at the shorter time frames, but this thing is approaching all-time high, and this thing is a target for disruption is the legacy markets, is New York Stock Exchange and Nasdaq and whatever internationally, respectively. This I've talked about synthetics, what the services and products it offers, and the potential is enormous. I have much more faith in these types of projects than I do companies and corporations in the real economy. Is the crypto market not the real economy? Is this not real? Because I'm looking at this damn chart and it looks pretty real to me. What's most fascinating about this chart, actually, um, and the dollar valuations of these assets is if you look at the Bitcoin price. This is obviously an SNX BTC chart, but Bitcoin has done a pullback. Now, take a look at the valuations, the dollar values for these crypto projects, and you're going to see not a substantial amount of fluctuation, which means these crypto projects are moving up in BTC value as the dollar value of BTC drops. These crypto projects are mega bullish, which is why I love the crap out of Synthetics, Ren, and Khyber. These are my three picks. Obviously, there's great projects all over the place that are outside the context of this narrative. This is a very, very precise, refined, reduced, boiled down narrative, and this is my chosen collection of assets that represent what I think are the strongest plays, recurring revenue streams in the DeFi space. How is RemVM positioned to succeed, disrupt legacy markets and crypto finance? Interoperability facilitates liquidity, cross-chain interoperability. The DeFi space facilitates the search for yield. So Bitcoin is an on-ramp, and frankly, nowadays on Gemini, you could get straight to die. Listen, if you could go straight to die on Gemini and throw it into a 4% Aave position, you're getting 4% on a dollar peg cryptocurrency. there's no reason to keep your money in a bank account other than the complexity of, frankly, managing profit loss and taxation. There are entire that is an entire unknown of how the hell to manage interest-bearing crypto that's making 4% yield. Himanshu wants me to talk about Rune real quick. Rune, generally speaking, has an interesting technological offering, but is a Binance IEO, and IEOs are overwhelmingly owned by Binance, which means I don't trust the valuation. I don't trust the capacity for Binance to liquidate large positions and entirely drive down the market, even though that's not in their best interest necessarily, but it's just a matter of trust. I do not trust it. I wouldn't play by Rune or Matic. That's just me. You're all welcome to make your own choices, but I look at what I just said as my fundamental perspective. That is my opinion. It's something that I do not trust. I trust when there is not a centralization of asset holdings, and an IEO inherently has a massive centralization of asset holdings. Red BTC. Yeah, okay. I mean, look at the weekly on this bad boy. Oh my God, this thing is it's straight up. It's literally just straight up. It's way past all-time high, and we can look at the shorter time frames, but I frankly don't care. I don't care if this thing comes back to 1400, 1300. I don't even care if it comes back to, if it doesn't make a new low. I don't care. So the previous low, the 908, I don't even care if this comes back to 1000 and it's at 1600. I don't even. I just don't care. The fundamental analysis of Ren is just extraordinary, and the price of Ren is irrelevant. Why? Obviously, from a trading perspective, if you can't get into a position of a dark node, it's meaningful, and you have to be careful. And you want to accumulate BTC. From a trading perspective, the goal is to accumulate BTC. Let it go to 1748 and then sell it, and then it goes back to 1500 and buy it, and let it go to 1800 and sell it, and that's the whole trading game, the accumulation of BTC, because at some point you have to sell in order to get the gains, and that's the problem with trading. For me, I focus on recurring revenue streams, not about one-time gains, but recurring gains. For me, that is my strategy. I want value to work for me so I do not have to trade time for value anymore. What is that? That's called work. Money working for me instead of me working for money. Think about the risk of trying to get 4% yield in legacy markets. Dude, I mean, you're talking about REITs and you're talking about corporate bonds. I'm not touching any of that stuff. I do not trust it. REITs, yeah, you could probably pick some decent REITs, but the foundation of all of them are still a functioning economy. Now, the risk is, you'll have so many folks talk about the virus as being overblown, no doubt, and that's a political analysis. But from a mathematical analysis and an epidemiological analysis are not considered, they're not going to shut down the economy again because the economy was destroyed. What does that mean? That means the economy is going to be open, and you're talking about so much psychological resistance to any viral control measures. People don't even want to wear masks. So the logical conclusion is this thing will continue to spread with folks thinking that the risk is trivial. But the risk isn't about death. The risk is about hospital overload. Well, once the hospital is overloaded, then you start to have the tents outside, and then it just keeps growing, and then you're inducing psychological trauma as those type of visuals appear on mainstream media, and that's what the entire economy and the whole functioning of the system is about: is the psychology, momentum, and once it's traumatized, that's what destroys economies. Clearly, we're on three charts, and that's such a digression. I love to digress. Hit me with the comments. Yes, so this is I moved some additional value into this asset. I mean, this thing looks like it's this is my play right now. Um, Khyber is a governance token, as I've said. This thing is like comp and bow, and it's completely distributed. Absolutely incredible. Lewis says 40,000 COVID cases in the U.S. yesterday. All-time high. So they shut down and destroyed the global economy, and it came down. And when we are exactly where we were pre-destruction of the economy. We literally wasted the destruction of the economy, and we're back to where we were. I laugh not because it's funny. I laugh because it's freaking disturbing. I don't have faith nor trust in the intellectual capacity of our leadership, their capacity to express reality of the financial system, their capacity to express the reality of biological issues. They're not articulate. They don't have a capacity to express, put good, well formulated ideas into society. I was just going to say out of their mouth. They can't even express good ideas. Anyway, I don't want to get too agitated. Ren Mainnet, my goodness. Let's give a refresh. Refresh, refresh. Give it a second. $20,150,000 in less than 1 month of launch. $20 million. You're talking about a startup that does. Think of it as a startup, and clearly a startup has to go through its funding rounds and pre-release phases, and this bad boy cranked out $20 million of volume in its first month. Yeah, if you apply a fundamental analysis thinking of this project as a company doing $20 million in your first month of business, all right. All right. Absolutely. I don't even have words for this. This is absolutely just incredible. Looking at the comments. Did you see the news on Khyber community staking pool? Yeah. Yeah, my man James. Good to see you. I want to run my own staking pool, so I ping Khyber. I'm looking for documentation. So you have to stake in a pool, and that's cool. Frankly, the staking is going to be a massive deflationary pressure. Um, the burn of the portion of transaction fees is a massive deflationary pressure, and Kyber is basically comp and bow. And what Curve is going to release inevitably. It is a governance token. What has happened with the all the governance token that have released? Ooh, looks like a rocket ship taking off. But guess what? Kyber is a fully released. This whole supply is out there. Comp is being has an emission rate. Bow has an emission rate, but Kyber doesn't have an emission rate. That bad boy is already out there. Can you imagine locking in 10,000 comp, 10,000 bow? Well, I'm loving Kyber. Now, none of this is investment advice. Do your own due diligence. Just because I'm passionate doesn't mean any of this fits your investment narrative. Always be diversified. You got to have gold, you got to have silver. Take a look at the gold and silver miners and streamers. Sure, you can look at equities, but oh my God, you know my opinion. Cash, gotta have cash to pay the bills, but that shit is not going to the moon. Imagine a bull run on the dollar. What does that even mean? How's everything with Digibyte? Digibyte's on point. What's up next for Digibyte? It got listed on. Let me talk about this for a second. A lot of people wanted me to talk about this. Binance listed Digibyte. First was announced that Coinbase was interested in listing Digibyte. Why did Binance list Digibyte? Money. They front runned the Coinbase listing. If Coinbase is going to list Digibyte, Binance wants to cash in. Front run. Say it with me now. Front run. That is exactly what they did. Why? I'm just thinking from a business perspective. It's just way too obvious that is exactly why they did what they did. Otherwise, everything's ridiculous with Digibyte. Digibyte has critical mass decentralization. It will exist in perpetuity. It has uh, fixed protocol properties. Its primary function is record storage and asset management. Period. I've talked about it. Nothing has changed. The narrative hasn't changed. This is the most important thing with regard to your investments. You cannot make choices. You cannot sell or buy unless the narrative changes. If the narrative doesn't change, why should the position change? If rent, that's why I say if rent drops to 1,000 um, sats, nothing has changed with the narrative at all. So the drop in value doesn't mean anything to me. Do you think the market cap of the entire crypto market will raise due to infinite money printing? Money print to go, brrr. Listen, I think Chico Crypto talks about it quite often. Uh, Money print to go burr can be devastating for all markets. If the equities market implodes, it's going to take out the crypto space. But that's not a mutually exclusive danger. But I have much more faith in the crypto space. I see the crypto space as disrupting the legacy financial system fundamentally. It is if the legacy financial system crumbles, the crypto space is resilient. Do you understand that the legacy financial system is under collateralized debt, which is why the legacy financial system is susceptible to fundamental disruption? The DeFi ecosystem is over collateralized debt, which means in the event of an insolvency event, in the event of default, the system is not susceptible to disruption. The borrowers take the responsibility. That is profoundly different at the fundamental level compared to the legacy financial system. And that means everything. And that means DeFi is a better financial system in all regards than the legacy financial system. And if the legacy financial system is in a position to crumble, that means it's primed for disruption. It's primed for something better. I don't trust the legacy system. I have more faith in the crypto space. Do your own due diligence, but that is my firm opinion. Thank you for what you do, RR. Much of it goes above my head, but I appreciate the growth opportunity. My man, it doesn't matter if it goes above people's heads. What matters is I am here Monday through Friday at 12 p.m. Eastern Standard Time, and we could always talk about the same topics over and over and over. So everyone has an opportunity to digest what the hell is going on. One step at a time, understanding things is an iterative process. It is not instantaneous even for myself learning new technologies, which I'm doing every day at my work. It takes time to learn new things for everyone. And what we need is a source of information, someone with the patience and time to reiterate and rehash the concepts over and over, which is why I love comments. I love the comments. I love hearing what someone is thinking, a question. It doesn't matter if it's been asked again. And that's why this damn channel is different than everyone else. Hi, Noah. Could you comment on the importance of open nodes for a project like Digibyte? So open nodes facilitate redundancy and data availability. Open nodes, if you go to, if you have an AWS instance and it has what 10 redundancies like RAID. So basically, open nodes are consistent with RAID. It's a component of redundancy, and geographical location of the open nodes is everything with regard to redundant storage of information. As I've said, UTXOs best suited for record storage and asset management. Record storage distributed across the planet, and that is a fascinating property of UTXO projects. Blockchain 2035. That is a great suggestion, Lewis, my man. Woo. Caterpie DGB on Binance. Woo woo. My man. Yeah, as I said, they were front running Coinbase, cashing in before Coinbase cashes in. And what happens now that Binance has it? Coinbase will have it. Gemini probably at some point. But Digibyte's not going anywhere, and it will continue to appreciate over time. This is a fascinating page on DeFi Prime, DEX volumes. DEXs will overtake centralized exchanges inevitably. You know my terminology and how I describe inevitable. Why? Because it's permissionless and there's no control, and it's peer to peer. You take your ledger, it stays on your ledger. You have complete control, and it's maximized security. Oh, is this DeFiPrime.com/dex dash volume? Absolutely incredible the amount of volume that's going on. Archie, yeah, this is what we do. I love this. It's exciting and fun. Here was a comment by DeFi Pulse. If I woke up tomorrow and yield farming was just something I dreamt of, I wouldn't be surprised. The reality is DeFi is now. Things are only going to compound quicker now. Compound, pun intended, compound interest, compound yield. Because if you ask me, I don't see signs of innovation slowing. This is the legacy system is primed for disruption and DeFi. It, DeFi, it's just a terminology. It's a viral terminology. Well, I mean, it has definition, decentralized finance. But the search for yield is alive and well in the DeFi space. The search for yield is dead in the legacy financial system. We're talking about 2 to 8% reliable gains for lending. You take a little bit more risk and you throw it into a liquidity pool. 20, 30, 40, 50%. You take even more risk, 100, 200, 300, 400% APY compounded. Oh my God. It makes the legacy system look pathetic. Is it common for projects to host nodes on AWS? Well, it is a centralization of resources in some regards, but it's still decentralized because they're separate instances. I wouldn't worry about it because the biggest thing they were thinking with regard to the CLI, focusing on DigitalOcean and AWS, is the capacity for the CLI to implement or ensure particular network security configurations, and that's meaningful. And that cannot be ensured with regard to a local deployment. And also with a local deployment, you're susceptible to network instability, and you're susceptible to maintenance requirements. You are responsible for making sure the server is online, whereas with a hosted provider, they're going to make sure the server's online. And that's their job, and that's why you pay them. So I think this was an overwhelmingly logical choice for the start of mainnet release. Anyway, 12:32 on a Friday. I'm loving this. This is where we're going to end today's show. I'm going to be on Twitter. I'm going to be throwing polls. You're going to be throwing questions, and we're going to keep this train running. Every day is a new day. Every day we get a chance to make the best decisions possible. And this is an absolute great place to talk and ask questions. Ask them over and over and over again. That's what we're here for. I wish everyone a wonderful Friday. I'll see you on Twitter.